Hello and welcome to the look ahead for Thursday, the 9th of May, with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we have the release of the Bank of Japan minutes. We also have Chinese trade data, the Bank of England interest rate decision, and US jobless claims. So just kicking off with the Bank of England interest rate decision. That comes as the pound has been under pressure and the FTSE reached a fresh record high today. Expectations are for the Bank of England to leave interest rates unchanged at 5.25%. However, we could hear growing confidence from policymakers that the UK inflation is on track to meet the 2% target. Now, inflation in the UK at the moment is at 3.2% in March, is expected to cool further towards that 2% target in April. Now, there'll be a lot of attention on the vote split, as well as sort of potentially a more dovish sounding Bank of England, that they can portray that through the updated inflation projections and forward guidance, potentially starting to pave the way for a rate cut in June or even if not in August. Now, the market's pricing in around a 40% probability of a rate cut in June and is fully pricing in a 25 basis point rate cut in August. Now, as I said, the vote split in the previous meeting, the March meeting, was 8-1. So there was one policymaker that voted to cut interest rates. Now, if we see that vote split become more defined, so we have more central bank policymakers voting for a rate cut, then that could put further pressure on the pound, as it would suggest we are moving closer to the date when the central bank starts to cut interest rates. Now, if we just have a look here, this is the pound US dollar. Now, it's interesting because at the same time that we've got the Bank of England sort of moving towards rate cuts, there are suggestions from Federal Reserve speakers that they may not even cut interest rates this year. So that's obviously keeping the US dollar stronger. And we've got that divergence between the Federal Reserve and the Bank of England on the rate cut expectations. Now, the pound here has fallen. It's just testing at the moment. If we can see there, it's just testing the 125 level. That's basically after it rose to a high of 125.70 at the end of April, and then we've seen it fall really quite sharply in recent sessions, testing 125 at the moment. If we get a break below 125, then we could see 124 come into view next. On the upside, buyers are going to be looking for a rise above that 125.70. That's also the 200 SMA, in order to be able to extend gains towards 127. So if we get that more hawkish, a more dovish stance from the Bank of England, we could be looking for a move towards the 124 for the pound. So just moving on, this is the FTSE chart that we've got here now. I'm looking at the FTSE chart not only because we've got the Bank of England interest rate decision, but we've also got Chinese trade data. Chinese data does tend to move the FTSE as well, just because of the influence on oil prices and metal prices. And obviously the FTSE is heavily weighted in energy stocks and resource stocks. So Chinese imports are expected to rise 5.4%. Exports are expected to rise 1%. This is after they fell in the previous month. So upbeat numbers from China again could help the FTSE push higher, as could a dovish sounding Bank of England. Now, if we can see, the FTSE rose to a fresh all-time high today, closing at just over 83.50. We are in overbought territory, so buyers should be wary. We could see a period of consolidation or a pullback in the FTSE, but buyers are going to really be looking to head towards that 84 level. As far as support is concerned, immediate support, minor support at that 8300 level, and then below that, next level really is at 8200. Not too much more to go on, but a break below 8200 could negate that near-term uptrend. Also, just worth looking at when we're considering the the Chinese data, is the Australian dollar. Now, the Australian dollar's had a pretty rough ride recently after we had the RBA meeting earlier in the week, which was actually less hawkish than expected, causing the Aussie dollar to fall sharply lower. Now it's just testing the 100 SMA at the moment at 65.80. If we see a break below that level, which is also really that falling trend line dating back to the end of last year, beginning of this year, if we see a break below those levels, then we could see a fall towards 65.20, which is the 200 SMA. On the upside, if we find that 100 SMA does hold and buyers successfully defend that level, then we could be looking for a rise towards 66.70, which is the March high. Just finally, keeping an eye on the US dollar, Japanese yen. Now, this has been very much in focus because we've seen the yen has been continuing to weaken, even though there are ongoing threats of intervention. Now, we can see here on the chart where we had that big drop in US dollar, Japanese yen, massive strengthening of the yen as we had those suspected interventions. Actually, the yen has continued to weaken, recovering the USD Japanese yen from that 152 level. It's rebounded higher. It's retaken 155. Now we've got the Bank of Japan minutes are due. If they come in sounding quite dovish, then we could see an extension of this rise, particularly given the comments that we've been hearing from Federal Reserve speakers recently, such as Neel Kashkari, who actually raised doubts over whether the Federal Reserve would be able to cut interest rates at all this year. Now, we do also have US jobless claims. They're expected to come in at 210,000. If we get some strong numbers from the US jobless claims, again, that could boost the US dollar higher. There's also a lot of Fed speakers to hit the airwaves between now and the end of tomorrow. So just on the upside above at 155, next level to be looking for is the 158, which is the May high. On the downside, immediate support is around that 153.50 level, but the serious support is coming in at 152. I do hope that you've liked what you've seen with me. And if you do, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.